Leave everything that you're doing and listen to this podcast right now because today is going to be different. Welcome to the Recipe of Wealth. I'm your host, Chef Yuvraj, and today I'm going to be introducing you to my mother, Kavita Rai, a renowned investment educator.
Thank you, Yuvraj, for having me here. I come from the world of finance, trying to get everybody, young and old, into the world of finance to grow their savings into wealth.
Okay, so let us start with the most obvious topic, tariff tsunami, how to ride the waves. Question 1. Mother, tariffs are shaking up the market, and how can we navigate these choppy waters and keep our investments afloat?
Think of US tariffs as a stormy weather forecast. US physical deficit has been elevated. They are consuming more than they are producing. They are spending more than they are earning. So this fiscal deficit, trade deficit, current account deficit is leading to debt to GDP ratio to be elevated. So a correction was needed. President is now trying to bring in tariffs to sort this out and is also doing the Department of Government Efficiency. All this will only rectify things. Yes, it is a storm. We are lucky in India that these tariffs are lowest for us. So India in this entire thing is going to be an oasis in the desert. When the storm comes, there some deposits do come on the oasis too. But when the storm clears, we are going to be the oasis in this desert.
Very nicely said. For question 2, what makes India an attractive investment destination and which sectors offer the most promising opportunities?
In December, the Indian economy grew by 6.2%. FY25, the economy should be growing by 6.5%. Inflation is at its lowest. The GST collection is at its highest. India is manufacturing sector and service sector, there is major expansion. Amongst the G20, India is going to emerge as the country with the maximum growth. So India is where you should invest.
Very well put. So which sector should one look at?
Private consumption recovery is underway. FMCG volumes are increasing, especially in the rural sector, urban sector to follow. The RBI has reduced the interest rates twice. This makes the EMI lower and therefore gives more money in the hands of a consumer. Also, the 1.5 lakh crore finance ministry introduced the tax budget, that is to reduce the tax for the consumers. This also will give a lot of money. This has just come into effect in April. So now we are going to see a lot of consumption. We have the oil prices, the global oil prices come down. Therefore, I see that the petrol and diesel prices are also going to be cut. So that also reduces inflation. And we also see that there is better monsoon this year. Better monsoon means better harvest. All these turn out to be that a push or a tailwind to the FMCG sector. Other than that, we also have government is going to be spending 1.6 times more in the infrastructure in the next 5 years. This is going to give a lot of boost to engineering. We should be concentrating on domestic sector since this tariff is on. So our engineering companies like Timken India, Engineering India, these kind of companies should be focused on. And we cannot forget another sector, that is power, because whether it's AI, whether it's infrastructure, it's engineering, everything will need power. So these three are my focus for these sectors, even while the tariffs are on.
Wow. Thank you for the insightful information. Question 3. So according to you, is this the right time to invest in the market?
Yes, this is the right time. I don't see much of correction anymore because our valuations are no longer at premium. Our earnings remain robust. So where is the problem? The FIIs are going to come into our emerging economy and India is going to stand out in that.
Question 4. What is the optimal approach for new investors to enter the stock market and achieve sustainable long-term financial growth?
Very important and a must. And you must do it immediately. Start putting your money in SIP. systematic investment plan in two kinds of funds. One is a balanced advantage fund of any bank, of any company, and also a multi-asset fund. These two are very important. Please start your SIP today. Whatever little bit you can save, even 1,000 rupees a month, even 1,000 rupees a day, whatever is your capacity, invest in that manner, and you will see how it grows. Your money, your rupees will grow into billions, in crores of rupees if you start your investment today, even in a small way. Other than that, if you want to do equity, there is only two things I will ask you to learn. One is the Dow theory, and one is an essential indicator called relative strength index, or RSI. Let me share an insight. In September, October, we saw the RSI, or the relative strength index, gone into overbought, and I could see the correction. Me and my husband sold our mutual funds and we kept the dry powder aside. Now that I see the correction is over in the charts, once again seeing the RSI and the price action theory, we are putting in money back again into the market, sipping the dip. Sip the dip. It is very important to put in your money. All you have to do is start early, stay invested, and let time do the magic.
Perfect. Thank you for tuning into the Recipe for Wealth. I hope you've enjoyed this flavorful mix of finance and fun. Mother, your insights have been delicious, and I'm sure our listeners are now hungry for more. So until next time, stay wealthy and keep cooking up a storm in your financial journey.
Thank you.